So just to recap on the overview of the presentation, just to remind that we have already seen the first part, so the part on the background and then on the IC part. And now we're going to discuss similarly the pension fund sector. So it also follows a similar structure. So you have a definition and relevance of the pension fund sector. We will discuss the ECB regulation on the pension funds. We also will have a closer look to the PF data, and then we will review a few conclusions, and also there's also finally an annex with the references. So we move to the second part of the presentation. That is the pension funds sector. So we start with the presentation of the pension funds by the definition that is included in ISA 2010. So basically, pension funds are defined as the financial corporation and quasi-corporation that are principally engaged in financial intermediation as the consequence of the pooling of social risk and needs of insured persons. So it's social insurance. So pension funds are social insurance schemes provide income in retirement and often benefits for death and disability. So in this case, if you remember when we were discussing the pooling of social risk, in the case of pensions, are very, very focusing on these topics. They are related to retirement, sometimes benefits for death and disability. They are very, very peculiar aspects that they will cover the pension fund. So they are pooling risk for these events that could happen in your lives. So for instance, when you finalize your working life or you have any problem, maybe you have some sickness and then you have to leave your work, so it will be a pension paid, and then the pension funds, they are covering for this type of risk, and of course you are paying a premium for having this coverage. Then an important aspect of the ECB statistics that they are covered is that the ECB statistics are covering autonomous pension funds. So the autonomous pension funds, I included here the definition, I will not read through, but basically the autonomous pension funds are those that they are separately from those institutions that they set up. So for instance, Lufthansa, they have a pension fund, and if it's autonomous pension fund, it's a separate institution of Lufthansa non-financial corporation. So this will be an autonomous pension fund. So they can take their own decisions for autonomously from the company that they set up. So this is very important. And also very important, these autonomous pension funds, they don't cover the social security schemes, that they are totally separately, and they are organized by the general government normally, and they are also controlled and financed by the general government. In this slide, what we are presenting is a chart that is describing what could be the different pension benefits that an individual can have. So these pension benefits can be split or can be offered by social insurance, by social assistance, or by individual insurance policies. So if we look in the second row to the social insurance, it was the aspect that we were looking more in this presentation. You have to keep in mind that this social insurance, they could be offered by three pillars. So basically, the first pillar is the government, social security funds. The second pillar is offered by occupational pensions, so normally the employment related. And then there's also a third pillar that is also personal pensions, that maybe they are organized by certain professional institutions or professional associations. They also offer these personal pensions. They are also work related, and also with a very specific issues to have this enrollment. So keep in mind there are three pillars for the provision of pensions. First pillar, government. Second pillar, occupational pension. Third pillar, personal pensions. In the case of the ECB regulation, we are covering the ECB statistics for pension funds is covering mainly is formed by second pillar, but there are also some personal pensions as well within this within the pension fund statistics collected by the ECB. On the relevance of the pension funds, looking to the data, so the pension funds play an important role in the euro area economy. So because they present an opportunity for households to save for retirement, because around 20% of the euro area households' net financial wealth are pension entitlements, so are investments in pension funds. And also, they help as well the efficient allocation of long-term capital, because the pension funds, they allow for this long-term oriented horizon investment. So it's very important as well for the economy to have long-term funds for the financing. The total assets of euro area pension funds amounted to around 3 trillion in 20 Q4, and they represent around 3% of the euro area financial sector. Also keep in mind that the gross domestic product in 2020 was circa 15 trillion. Of course, there's also a variety of distribution across countries, because in some countries, the pension fund sector, as defined in the ECB regulation, is more relevant in those countries that they have a very large pension funds that this based on the occupational sector. So basically also a key aspect of the euro area pension funds is they obtain capital from resident members. So basically more than 99% of the pension entitlements, so the main liability item, are from the member state where the pension fund is located. While for the pension funds, they invest in a geographically more broader area, because the euro area pension assets are more diversified geographically, and basically only they invest 55% in the domestic assets. And finally, there is also high interest in the use of pension fund statistics, not only for monetary and economic analysis, but also for financial stability purposes and euro area accounts. So we will see that there is also high interconnectedness with the investment fund sector, and of course with the other sector of the economy, basically also with the euro area households. But these are also key aspects that they are also very relevant for the financial stability purposes. In this slide is presenting what is contained in the main features contained in the regulation, ECB regulation on pension funds. So it's the ECB regulation ECB/2018/2, so it's the number of the regulation. So on a statistical reporting requirements for pension funds, so the PF regulation. So on the main features for this regulation is that it's based on solo reporting, so it's not consolidated or group data. In the case of pension funds, this is not so, I would say, not so relevant aspect that maybe in the insurance corporation that they are more groups. In the case of pension fund, they are not so, I would say, consolidated data is not so relevant. So in the case of the pension fund, there is also a possibility to use supervisory reports to minimize reporting burden. The information collected through the regulation is mainly quarterly balance sheet, and also we have data on members. This is reported on an annual basis. And also an important aspect that in some cases, some NCBs, they are only collecting annual data for liabilities. So that is, as a result, some quarterly estimates have to be derived for these countries. On the type of data, so we are receiving end of period stock data, and also revaluation adjustment, transactions, security by security reporting. That is very important. So these are important aspects for the reporting, because they will have more detailed information. And also on the deadlines, the timeliness, the reporting to the ECB was reduced also sequentially from 10 weeks in 2020 to 7 weeks in 2022. And then the annual reporting will be also reduced from 20 weeks to 14 weeks. In this slide, we can see what was the result of a work that was done for first time, a public consultation on an ECB regulation. It was a public consultation on the PF regulation. So there was discussed a draft that was posted on the ECB website, and then there were some discussion and some comments received from the institutions, from the general public, and then there was discussion on the country breakdown, on the timeliness, on the data to be reported. So the ECB received these comments, and then there were some of them that were taken on board, and then finally the draft that was presented, there was a slightly changed, and then it was a final draft approved by the Governing Council, and it was published on the European official journal. It was then the final regulation to be implemented for the pension funds. So all of these aspects were also covered in the new regulation, and it was the first time that the ECB launched a public consultation. If you're interested, you can also have a look in the ECB website, and then I have included as well in the reference, in the annex, a reference to this consultation. Then having a closer look to the data, in this chart, what we are presenting is the total PF pension fund assets as percentage of country GDP. So as you can see, the period is from 2008 to 2019. So basically covering the period from the Great Depression up to 2019. So it's very relevant. In most of the countries, it was an increasing trend for the sector, for the pension fund sector, and also for the euro area as a whole. Just the peculiarity showing here on the right-hand side that Netherlands, that the share of the GDP that is on this right-hand scale is more than 200% for Netherlands. So it's very, very relevant in the case of Netherlands. In the case of the other euro area countries, I mean the GDP percentages is on the left hand side, so scale. So in that case is less, but it's around 25% of the GDP, and I would say it's quite significant. So in the case of Netherlands, is a very, very, very important sector in this country. If you remember, when we were looking to the schematic balance sheet of the insurance corporation and pension funds, so they were investing in basically, I mentioned they were investing mainly in investment funds and also in debt securities. So this is the case because here in this chart is presenting you the assets held by euro area pension funds. As you see, the large investment by pension funds in the euro area are investment fund shares. And we can see in the next slide, so it's around almost 1.5 trillion, and we can see in the next slide in what type of investment funds they are investing in. So as a follow-up to the previous slide, here you can see out of this around 1.5 trillion of investment fund investments by euro area pension funds, they invest a lot in equity funds, also mixed funds, and of course bond funds. So you have to keep in mind that maybe the direct investment in equity maybe is not seen in the balance sheet, but if you look through these investment fund positions, you can see that they have more exposure to the equity markets that apparently they have in direct terms. So because they are investing through these investment funds, so they can affect it. Any change in the financial markets, in the share markets, in equity markets, will be affecting the pension funds. And before this information, they were not available for the users. So this is very interesting information that now is collected by the ECB, also very interesting for analysis and for financial stability purposes, of course. Then we are now looking in this chart what are the pension entitlements by country and by type of scheme. So basically here is showing you what is the for pension entitlements. We have basically two types of entitlements. We have defined benefit and defined contribution. And if you remember, is this very similar what we have for the insurance corporation. So the defined benefit is very, very much linked to what is the non-unit link contracts, while the defined contribution is very much related to what is the unit link contract in the insurance corporation. So the defined benefit normally is a type of contract that the pension fund offer to the policy holder, that they agree in a certain amount of money to be paid after the pension. So it could be 60% of the wage, and there is some kind of maybe a formula to be calculated. While the defined contribution, the policy holder or the pensioner, they have to choose a certain basket that they invest, normally through these investment funds, and they have to decide this portfolio allocation, and in terms of the contribution that they made to the pension fund, they invest in this basket, and they will obtain at the end of the professional career, the working life career, they will obtain a pension based on the contributions that they made and also on the return that they came from these investments. So basically, and also to keep in mind, the defined benefit, the risk is for the pension fund, and in the case of the defined contribution, the risk is for the policyholder. So also this also is a change in many pension funds from defined benefit schemes to defined contribution schemes. Still, you can see that in the euro area, the major part of the pension schemes or pension entitlements are defined benefit. But there are a lot of ongoing reforms in a few countries that they are moving to defined contribution. So there is a shift of risk from the institutions, from the pension funds, to the policyholders. So you have to keep in mind this development as well. So then on the final data, the final slide on the data for pension funds and also a review of what we were discussing. Also for pension funds, we have an integrated reporting with supervisory data with IOPA. We also have this system of using the supervisory templates or supervisory data to be used for deriving statistical data, statistical tables. So we also have a close cooperation with IOPA for designing and providing this data through the national competent authorities and so on. The first publication of the pension fund data was in 2020. So, and then also keep in mind that also is very important is the interconnectedness of the pension fund sector with others, especially with the investment fund sector, as you see, we have seen already in the presentation. And then finally, you can see in this chart that the pension fund sector, it was growing in this period from 2008 up to now, and also as a percentage total assets, but also as a percentage of GDP. So it's a sector that is growing more importance, and it will be a sector that likely in the future will be also increasing his importance and also his role in the euro area economy and financial sector. Then we are getting to the conclusions that they will be, I will say, it can be common to both sectors. They have a lot of similarities. In the past, even they were reported together. So we are going to discuss briefly a few conclusions on both sectors. They will be presented afterwards. So in this last slide of the presentation, there are the conclusions for the statistical requirements for insurance corporation and pension funds. I would like to focus in 5 points. So the first point is that there is an increased importance and demand for data for these two sectors. And this increased importance and demands, they are based on monetary policy, because there's also this an increased financing aspects, also the transmission mechanism of the monetary policy, wealth effects, they are also related to the euro area households. And also it's a strategic review work stream also for the monetary policy, because these two sectors are very affected by the low interest rates. So the lower the interest rates, this sector also they have some difficulties to fulfill their promises to pay their annuities or the pension. So the lower the pension, the interest rates are, the more complications this sector they have to pay their annuities and their pensions. This is also related to the financial stability, because this risk can be associated to the sector, but also there are a lot of linkage with other sectors, as we have seen, and the interconnectors are there. So we see that, for instance, in the pension fund, they are very interconnected with investment funds, and as well, the insurance corporation, they have also a lot of interconnectors with the investment fund sector and with other sectors. So this is also very relevant for financial stability, and they are very relevant for input as for other statistics, specifically for financial accounts. So other aspect that I would like to highlight is that we have to work on a periodic reviews of the statistical frameworks to ensure relevance. So Basically, these two new regulations, as we've seen in this presentation, they were fairly new for the insurance corporation and the pension funds, but normally we give some kind of stability, at least 5 years, for the reporters to stabilize the reporting schemes. But from time to time, we have to review, and then to have these periodic reviews for the statistical frameworks to be up to date. Also, another trend that there was also there for an important point is that it was also keeping in the IC and PF regulation. There was also a trend for requesting more data at entity level. So also this information that was already requested, and we have also security by security for both regulations, and this data is reported through the ECB regulations. And it's very important to have all this granularity in the data reporting. Also, these two regulations were also very important to fill the gaps in the financial sector, because in the past these regulations were not there, and there was also some gaps, data gaps, and basically also these two sectors were reported together. And all of these also fit in the ECB medium-term strategy to have, I would say, more split on the sector, more granularity on the data, what could be the impact of monetary policy in the different financial sectors, the interconnectors between the different sectors, financial stability purposes. So all of these fit very well in the ECB medium-term strategy, and also for monetary policy purposes, because this low interest rates, if this will be maintained in the long term, they could have an impact on the financial stability and the financial health of this sector, that, as we have seen in the presentation, also can impact other financial sectors or even other economic sectors in the euro area. So this is the presentation up to now, and then later, after this presentation, you also have a few references that I included in a slide that you can access to further investigate, further analyze the information from these two sectors. Thank you very much.